Hi guys. Whew, here we go. So I promise that I'll explain a strategy for you to trade jump. So it's either jump 10, jump 100, jump 50, or jump 25. No, yeah, jump 50 and 100, and also 25. But I haven't traded 25. I don't recall trading 20 jump 25. So I just took these trades now. So I just want to quickly show you something. So these are the trades that I took, right? So the reason why okay, so in this strategy we look at a 15 minutes time frame, right? So on this 15-minute time frame, what you are looking for is so this is what happens. So this also works in the forex market, you know. So you can trade currencies, you can trade like indexes, you can trade like NES 100 or USDT or German data. So what happens is I saw another move today on German data, and also what's this, and also NES 100 in the morning. So although I didn't do well on the first trade, so but it was almost the same thing. So what happened is the market will give a strong either a strong sell or a strong buy, right? So as soon as it pops up that long candle on 15 minutes time frame or on the 1 hour time frame, what happens is the market will just push one strong candle going down or going up. So what I do when I trade, I normally do trade those candles. So it's one of the simplest strategy that you can try, you guys, other than the other complicated ones. So but my focus is on support, resistance, and also price action. So this one I'll say it falls under like price action as well. So this is what's happening. So as you can see on the previous, we had a long bearish candle, which is this one. It started from the top there and it went down through to this level, right? So what happened is when the candle is after a strong candle like this, it's happened on the market, chances are the market will always comes back and close that gap. So it need to come and fill up those prices. So this is imbalanced, so it shows that there's imbalance. So there was a lot of sellers more than buyers. So a lot of buyers more than sellers when it's bullish like this one. So what I target is as soon as I see those big candles, I wait. After waiting, so I had my support and resistance here on the laptop. So this one is just that is on a different level on the phone. This one is on a different level, right? So but I can just put it here. So my support was there. That was my first support. Then on the laptop as well, I had another second support, which was here, right? So what happened is I saw that the market is already that bullish candle. So I know that that bearish candle, I know that the market will definitely come back to that level to close that gap, right? So what happened is I waited for the market to give me a reversal signal, right? So when it gave me a reversal signal, that's when I started entering. So as you can see, the market went further down and down and down and down. Then it started consolidating. So it was consolidating up and down, up and down, up and down. Then it gave us one bullish candle which was going up. So after getting this bullish candle, then I was like, no man, the price, now it's time for the price to reverse. Then the problem was I see this bullish candle. So I know this bullish candle must be mitigated also. The prices must be filled up, right? So I was expecting the market to go down. So what happens with this candle, the market will reverse either 50% of the candle or 70%. Sometimes it reverses 100% of the time, like 100% of that strong bullish candle. So in this case I entered here. So after the market gave me so this bearish candle, then it came back rejected. Then I was like, okay, this is almost 70%. Then from this level I started adding my trades. So while I was I didn't started by buying, I started by putting buy stops, and a lot of buy stops. So on this level, that's why you can see that small gap there. This will buy stop. So this one I entered them on the market, on the market execution. Then the price went down, then it went up. Actually it went down. Then when it went down, just took some of my some of my orders. It triggered all of them. Then it went down. Then some of my orders were closed, basically because I was running out of balance. So it was closing them. Then again it came back up. So I saw it when it was somewhere. Then I was like, okay, let me look at it. Then I was like, I'll just hold up for some time to see how it's going to react. But I definitely know that it must reverse up to close that gap then. So while I was waiting, then the market went up. So but this is the sad part. I took a loss of about $12. So I had like $19. So I took a loss of $12 when the market was reversing down. And it took out some of those trades that you can see. Then it left those smaller trades, the 0.1. But okay, here as you can see. So but this is the most important part. So sometimes it doesn't do this. After it gave you a signal of rejection and a signal to go up to mitigate that price or to fill up the orders on that long candle, the market then will continue and go and fill them up. Then after that it will reverse down or continue going up depending on the direction of the market, long-term direction of the market. Like in this case it's bullish, so it has to continue on the bull side, you know. So this what's happening. Let me just check another one. So as you can see, this is the other example. As you can see, this is a very big candle, a very big bullish candle. Then it went up, then it started consolidating some rejection and what, then it started going down. And when it goes down, then now you can see that the price started falling down to fill up those gaps, those prices. Then it filled up those prices. Then after filling up those prices, then there was small candles, then it continue on that direction. Then you check another one. Okay, this is also another one, but this one should be on. This is 15 minutes, this is 30 minutes. So two long bearish candles, which will be one long bear candle. So the market went down. After going down, then it comes up to mitigate that candle. Same thing here. You know, sometimes it might not come back. Like there are times where it comes back like right away, and there are times where it doesn't like come back right away to that price. It will take some time, but once you check on the previous one or on the other side, then you see that there's a bearish, there's a strong buy candle. You must know that it will be mitigated at a later stage. So once you see price coming to that level of the candle, start selling or start buying. As you can see, even in this one, look at this one. It was like, whew, it went up very nicely. Then after that consolidated, came down a little bit, which this one was very tricky because I would have bought. But anyway, it went up, then and up and up and up. Then later on it come back, mitigated the price. You see this about 70% of that candle, then it reverses. So your take profit must be on the 70%. So on the video that I explained as well, on the previous video that I explained, I said to you guys, buy at use a minimum lot sizes, and as you use minimum lot sizes, you must also, as you can see, there's another one here, mitigated. So it came back, fill up the prices, went down very fast, then went up, fill up the prices. On the 70% you would have maybe close your profit, but continue up, then it comes down. Let's check another one. Can you get jump 50 maybe? So same thing on jump 50 as well. You'll always find it. Just give yourself time to go and look for it. Okay, this one's not mitigated, but this one, it went up, you see, very sharply. Then after that the price came down. You know, you can book some nice profit. You see, these ones were not mitigated, so they went down. Prices were not filled up until here at the bottom, then it started reversing up. You know, those are the things. So you can just take your time, study this, practice it until you it's easy, and you can just use like minimum lot sizes when you trade this. So it depends on jump. So after a big candle, you can look at it also on 1 minute time frame. It's also good if you want to scalp it. 5 minute time frame is also good. You'll always find those big candles. Later on the prices will come and fill them up before it continues to a certain direction. Let's see jump 75 as well. yeah, you'll always find those yeah, so but you'll always find those big candles, you know, that need to be mitigated, or they need to close, they need to fill up those gaps. So that's what I wanted to share with you guys. It's less risk strategy, as long as you use a minimum lot size. So use minimum lot sizes, put a lot of trades. As soon as it goes to profit, add more trades, add more trades, add more trades, and need that market, because it normally moves very fast. So there's okay, so I'll send another video as well, which I just took now, because on this trade that is running. So what's happening is normally to avoid sometimes having letting your emotions controls you when you are watching the trade. Don't watch them after putting a lot of trades, walk out of the market. But I advise that you use a laptop, because if you have got a laptop, so that you can put alerts. So normally I use alerts, you know, to a certain price. So let's say I bought let's say, okay, so this is a big candle. Now I see it's coming down. It's when it's coming down on this side, mitigated on this level, I'll just enter myself. When I enter myself, then at a 50%, at a 70% of that level, which will be somewhere here, I'll put my alert, so that thing will make noise. I'm sure you heard a beeping at the background now while I'm recording this video. So those are notifications that the market has reached a certain point of my profit. Then I can go and close my profit, because it's hard to put TPs and stop losses when I'm trading with a lot of aggressive trading, you know, putting a lot of trades. I can't go through all those trades and add stop losses and take profit. And anyway, I'm risking what I'm willing to lose, you know. So if I put $20, I'm losing that $20, you know. I know that I'll make profit or not make profit. That's the goal, you know. You understand? That's my risk management. So I don't know your risk management. You can also use the risk management of losing, maybe risking 1% of your account. So also I can say I'm doing the same thing, because I've got a balance on my account, which every time after losing that $20, I transfer another one. If I want to lose $30 on a certain trade, I do that just like that. So that's how you should do it. Thank you guys. If you have any questions, you'll just text me.
Me, I do it for my squad like Ronaldo. I'm never in the bench like Ronaldo. Yeah, man, funnel a muscle like Tavatido. Ich style shaman. We fly. Ich style shaman. Ich style shaman. Anga kona lelimpompa nga style shaman. Fly.